Good afternoon, all. CamelbackTrading.org coming to you this Monday afternoon, May 1st. And we are looking at Window Trader's market profile of the ES and SPY. Again, kudos to the bulls as they don't even consolidate today. We spent the majority of the day back and forth through the base of the price spike and above Friday's high. It is the second smallest range of the year. $2.35. Amazing. It's horrible volume right now. We'll see if that goes in the top 10. I had an excellent day today. For that kind of range, I took 21 over 21 points out of the day, and I missed the biggest move of the day, which I called. And again, this is what we offer in this room. We don't tell you after the fact. We don't tell you during the fact. We try to tell you all day as the market's evolving what we're looking for and why. We don't just say, "Oh, I think it's a sale here or a buy here." We clearly state and give my reason along with the other people in the trading room when they give their opinions and stuff. And boy, oh boy, does it help people. I'll tell you one thing: if you didn't take the short in I or J, I know I did, kept people out of longs. So very happy on that. NQ ends 8 wide. They took out both sides of the IB, but only the overnight low. Righty takes out both sides of the IB, but only the overnight high, and they end with an afternoon rally high in G and 8 wide. We end only 8 wide, which is shocking with a range so small that we couldn't get 9. We take out both sides of the IB again. That is the 31st time out of 82 trading days. But we missed the overnight low by a little over a point in M. So we only get the overnight high. And we end with only 8 wide, no pullback, no afternoon rally high. Would I be surprised if we come into balance tomorrow and take out today's low prior to the Fed? No, not really. My best periods was C and D. So let's go over it. I basically broke even A through B. I shorted A. Against Friday's high, started going. I took it off for a point loss. I actually went long in B on a pullback, but I wasn't liking it. Got out of that break even. I should have held it. And then I took a short at 4,200 in B, made small on that. So I broke even in A and B. But C and D is where I made my bread and butter today. 15 points on the short side. I did not think we were going to blow through 4,200. I did not think we were going to go blow through a 6-month balance high, and it didn't. And I did very well on that. Then in G period, I took a short saying we're not going to hold single prints. When we did get through 4,200 and we were going to the balance high, made 3.5 points out of that. Now here's where I screwed up. I and J, I'm like, and again, this is before the market started rolling over. I said we keep testing 4,200. We keep getting close to the balance high, but we can't raise the volume POC. We were having trouble doing that. We did raise TPO at the time, but volume POC wasn't following. I'm like, I think, even though buyers are still in control, we were still one time framing up at this point. I said, even though buyers are in control, we've had such a small range. We have not had a liquidation break of any kind. We haven't seen the opening since the opening in 3 days, Thursday, Friday, and up to that point, today. I said I would not be surprised if we go get the opening and make a new low. Well, lo and behold, I took a short to at least get to POC. Wasn't getting anything for it. Took it off for nothing, a point. And then look what happened. Boop. We got out flush and made a new low on the day. The only trade I took after, I did take a long in K for 2 points. And I ended up making 21.5 points. So we didn't say, I think the market's rolling over when it was rolling over. We said before we even stopped the one-time framing up, buyers are having trouble here. Volume's drying up. I said the reason not to look for an afternoon pullback or not to look for one to really lean on was twofold. Number one, the indices weren't in our favor. They were only up small at the time. So you weren't going to get that help. But the main reason was the balance high. Now, again, I'm not calling it a failure by any stretch. It's a monthly balance. We'll see what happens by the end of this week with the Fed and non-farm payroll before we go anywhere near saying, okay, we blew it at the balance high. As far as destinations, in SPY, today's upside is 417.62, and then February's high 418.31. For the downside, we have nothing but today's low 415.27, and you should have all the other ones from Friday. ES, downside is 82.25. You should have all the other ones. And then the upside is today's high of 06.25, and then 08.50, which is the yearly high, and filling the gap at 20.75. And then just quickly on the charts. So the monthly takes out March's high. So I'm sorry, April's high. So we're one time framing up, but it's still balance. We do not go back to balance until we take out. We do not go up unless we take out February's high. Let's see if we're going to do it at some point. So the monthly is still balanced. The weekly is up. We were in a 4-week balance with an outside week up. Well, we took out last week's high by over $1 and change. To me, the weekly is up. And the daily is firmly up. One time framing up 3 days. Now, that is not a pretty close to the day. 1 day, please remember that, does not make a market. I don't care if we take out today's low and have a 3-day balance prior to the Fed. In fact, it would probably be healthier to shake out some of these week longs, right? By the end of the week, though, I want to come out of balance, if we do come into balance on the daily, to the upside. If by the end of the week we don't make a new high and we close Friday coming out of balance to the downside, say, then there would be a little worry for the bulls that they failed at a 6-month balance high. Hope you had a good day trading. Thanks for the likes and subscribing. Enjoy your evening. And we'll speak prior to the opening tomorrow.